Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Wednesday, and boy, I tell you what, it definitely what a difference a day makes. It's funny how that works. Market, just real interesting in that it definitely it definitely is moving, moving up. It's kind of hard to say. Very much strength today in Shopify, and I've been definitely putting together a position in Shopify, but it was up very strongly today, and I'm just still trying to figure out exactly why that was. I did get some indication that they had raised their prices, and for some reason that worked. I mean, the street certainly seemed to like that. So very interesting report on Shopify. I'll talk about that in a little bit. Wanted to go over the high-low ratio, and what this is the ratio of new highs to new lows, and so it does appear, at least from what I'm seeing here in the market, that we are getting some strength. I mean, it's coming in, it's moving up. It's almost 2 to 1 high-low ratio, and that has been improving steadily, really since the beginning of January. So it does appear, at least with this indicator, that we are getting some more interest in some of the stocks here. So high-low indicator, 2 to 1 new highs over new lows. Real interesting. Also wanted to go with the stock of the day. This is the IBD stock of the day, and I have another stock of the day that I want to show you. But this one is a Swiss sneaker maker of all things. It's called On, and currently it's trading at about $22 a share in a cup base. And let's take a look at the live chart on that one, just so we can see. I'm not in this one, but I definitely want to take a look at it based on this because it is an interesting, it is an interesting stock. So let's pull over to that live chart. There we go. And there we go with the live chart for this one. Um, Interesting stock. It does appear, now it's made a nice move above that 200-day moving average. It is breaking out to some new highs. 78 relative strength. Not quite strong enough for me. I like to see them at least 80, but very, very interesting stock. I mean, 67%, which is the checklist. Not the greatest. I wish it was better than this. This checklist is okay. It's not super, unfortunately. It's not super. And on the pattern recognition, we're basically still below the pivot. We're about 11% below the pivot. So interesting stock, and one that I'm currently not in myself, but interesting anyways to take a look at. I want to look at the fundamentals on it just to see, because that's kind of just telling you the tale here. They did, they had earnings back in September. They're up 42%. 61% before that. So any stock that is seeing this kind of growth, you definitely want to be in. Look at that earnings per share up 250%. Very interesting stock. Not a lot of funds in it yet at 208, and not a lot of in there. It's still underwater in terms of money, but it is coming up to a earnings date on March the 18th. So interesting stock. It has been in this downward trend. It does look like it's making a reversal higher. I'm looking here at this is the monthly chart. So definitely want to put on your watch list. I'm not buying it yet, just because I don't think it's ready. I don't think this one is ready yet. But interesting to put it on your list. Now here's one that I do think is ready, and that is Monolithic Power. This is an interesting stock. And I did put out a little video on this today, showing how I'm very interested in this one, and it just seems to be showing some very, very nice, very, very nice action. That's MPWR is the symbol. MPWR. There we go. There we go. And I'm going to look at the daily chart here. So hopefully we can see this. Yeah, there we go. All right. So MPWR. This is kind of in after hours. It was just basically even at 424.69. We were up in the up almost 1% today. So showing a lot of strength above the 200-day moving average, and that is interesting to me. If we draw the reversal line here, it definitely is starting to make a move above that key level, that key reversal level. So it has moved from a downtrend to an uptrend basically since the beginning of January. Some good some very good volume coming in there. Now this is in the semiconductor space. Not all the semiconductors are doing well, but I want to kind of run down the semiconductor list just to kind of give you an idea. This is what's happening overall in the list. We're seeing it move above basically the 200-day line. Now, not all of the semiconductors are in a good situation. We have, but if we look at percent off high here, we're going to see some, also Lattice Semiconductor, which is the number one in the space, and then if we look at the top relative strength, and that's really what we've got to look at is relative strength. Now, the strongest semiconductor stock right now in terms of its relative strength against the rest of the market is Lattice Semiconductor. LSCC is the symbol on that one. I do have a position on that. I also have sold some options on that one as well. So definitely, one that you want to look at as well. But this one, Monolithic Power, also doing very, very well in terms of its strength. It's basically Monolithic Power is an 82, but the earnings per share is 99. So it's in the top 1% in terms of the earnings per share. Relative strength is above 80. It's basically at 82. So very good ratings on Monolithic, and it's one that definitely I think is worth your time to take a look at. Here's what I've got in terms of my shares that I'm currently in. So kind of a little bit of a change up in terms of the stocks that I'm in, but so they're all doing pretty well today. I do have a position in AEHR, basically in two portfolios. I have that one in. That was up very, very nicely today. I don't understand why it was up so much, but it was up significantly, both in volume and in percentage. It gained 6.44%, and the volume was up about 9%. So that's looking pretty good. Fluor, this is the construction company. It was up strongly, but on weaker volume. Not the volume was off a little bit, but it was up overall just about 49%. LSCC, this is Lattice Semiconductor, one I was talking about before, down a little bit on volume, but up in terms of price. And it's making a nice move up about a little bit less than a percent. So that's looking pretty good. The real star of the day for me was Shopify, and this is one I did put out that alert on SHOP. I don't know if this is viable. This may be overextended, but the thing is when storms, it's true you don't want to buy an extended stock, but when it starts running, you definitely want to jump into it. And this is why I'm saying this one might give us another chance tomorrow. The volume on this one up 189%, which is amazing. And then also on the price, we were up as well as the percentage. So the price change, $4.64. The percentage change on that price was $10.87. So pretty nice. I have this in both portfolios as well. It was down a little bit, just slightly on Target Hospitality, up on TJX. I don't have a very large position in TJX, but this is in the retail sector. So for some reason, TJX is doing better, lower volume here. And then, of course, I was down a little bit on Exxon, unfortunately, but I still like that long term because I definitely think it's a proxy for the rest of the oil market. And I definitely think the oil market, is continuing to be pretty good. All right. Well, let's take some questions from TikTok. Thank you so very much. Let's see. Selma 317 is looking into Chevron. So let's look at Chevron. Let's look at the chart for that one. CVX is the symbol for Chevron. There we go. That symbol for Chevron there. And let's kind of analyze it, see where it's going. and see if it's worthwhile to get into Chevron here. So let's take a look at Chevron really quick. We're above yeah, this is nice. We're above the 200-day line, which is good. 84 on the relative strength. The fact that we're of 84, that's good. That's strong. On the checklist, 78%. So that's looking pretty good too. It's not really being accumulated by the funds, though. That may be a negative there. On the technicals, this is probably a good place to buy it. Why? Because the 21-day line is at 177. Is at 177.75. We're currently at 183.80, and we're up after hours. So this is looking very good. I think this is a buy. I definitely think this is a buy based on that. We're close enough to the 21-day line, so we're not buying extended. We've got to be really careful about that, especially in this market. We don't want to buy it too far above that 21-day line, but within 5%, we're okay there. We're only about 0.75% above that that line. So that's looking good in terms of there. So potentially as a buy, this is looking good. On the technicals on this one, we're about 6% below the pivot on a flat base. Stage one, so that's good as well. So this is looking bad. This is looking good. Let's look at the stochastic indicator to see if you know let's look at the stochastic indicator here just to see if it's overbought or oversold. This is a real interesting indicator that I use a lot to find a good buy point. Well, it does look like it's getting a little bit high on the stochastics, and that is showing essentially it is getting a little bit overbought. So this would be, this could be a sign that it is a little bit overbought here because the stochastic is the edge. So this is a negative here. So here's what I would do on this one. It's looking good to buy it here, but be careful. Don't buy it. It's probably going to, if you buy it, it's probably going to reverse lower in the next few days, just based on this overbought, oversold indicator. So if you're looking for a momentum buy, you probably want to wait. You want to put this on a watch list. You want to wait to see if it pulls back a little bit. Very likely to pull back here based on the stochastics. So, I definitely think that at least in the midterm, this is looking very good, but I do expect a pullback probably to closer to the 21-day line. That's kind of where I'm looking at. But basically, they're all stacked 10, 21, 50. So they're all looking pretty good. I definitely think that we're going to see this thing pull back, but then it may be a very, very good buy. Currently, Chevron is in the oversold position. That's what I'm seeing, but a good stock, and it's probably going to move higher. It's probably going to pull back a little bit, get some support at about the 50-day line, and then probably move up. So it's good stock in general. You definitely could buy it here, but if you do buy it in here, it's likely to pull back a little bit. Here's what I would do. I would wait a little bit of time, maybe a day or two. Let's see if it pulls back to that 50-day line. If we see some support at the 50-day line, definitely a buy. Definitely buy. But I wouldn't buy it on the open tomorrow. I would kind of wait a little bit, see if it pulls back. If it does pull back, then I think you might be able to see some real, a real good buy there, a real good place to buy it. Currently, see, after hours, it is up a little bit. I definitely think this will fade into, this is likely to fade. Now, here's the thing about this, and I want to also caution you about this one. We have earnings in 2 days on this one. So best thing to do probably is not to buy it for about 2 more days. Let's see how it does coming through earnings. Earnings for Chevron is going to be is coming right up on the 27th. So we don't want to buy it until it goes through earnings, and that's basically on the 27th. So just a few more days, but it's looking very strong. The sales are likely to be up. If we check the estimates, they're saying it's going to come down here, but I think that this first quarter would be very good because remember, what they're reporting here is the last quarter of 2022. That's likely to be up. So here's the thing. I think if you're looking for a good place to buy this, I think you're going to need to wait until we see what the earnings are in 2 days, and then probably buy it after that. But looking very, very strong, good stock, and I think you definitely have something that may work very, very well. I definitely like I like the big cap oils. I'm currently in Chevron. I mean in Exxon, so also real good there. Nvidia looks like it's moving higher. Well, I hope so. Here's the thing about Nvidia that I think I ought to put out there. It needs a little bit of time. I like the stock overall, but it's not a leader in the chip space right now. That's the problem. And I want to show you this because, it definitely has moved up. We're starting to see this on a lot of other ones. There was a huge amount of buying that came in here, and they definitely looking at, we're seeing this across the board in the chips. We're seeing this strong buying. It was up 31% today, over 8%, and it definitely seems like it's making a move here. But I think what we got to do is we got to look at it and relative to Lattice, because Lattice seems to be the leader here. And what I'm going to do is I'm just going to put these charts here. I'm going to get that with Lattice. Let me just LSCC. This is going to kind of tell the tale here between um, between both of them. So let's go to the comparison with the two stocks that I think really, uh, really are going to tell the tale here. This one, of course, there we go. Okay, good. As you can see, Lattice has outperformed uh, Nvidia. Nvidia may be getting ready to pop, but Lattice is looking better, and I think it is a stronger stock right now. So that's part of the reason I'm in Lattice as opposed to Nvidia. Nvidia is setting up, and I definitely think you should put it on your watch list. But I do see some headwinds for Nvidia, at least for momentarily, and that is it seems to be stuck here right at about this level. It's a little bit weaker, 89 relative strength, but it's improving on its relative strength. We have plenty of time for the earnings. Earnings are basically in 3 weeks on this one. So, as terms of an entry, I think that this is going to pull back a little bit. I want to look at the 10-minute chart on this one. I wasn't tracking this one today. Yeah, okay. So here's the 10-minute chart on Nvidia, and just looking how it does. We've got some buying at the end of the day. That's a strong signal. And we seem to have some resistance right about at this level. And that's giving us some resistance right at about 192, 193. That's kind of where we're getting the resistance on this one. Can you buy this one? Well, I definitely think I'd like to see it pull back a little bit. I'd like to see. Let's see. Let me show you the right chart here. Um, I'd like to see Nvidia pull back a little bit just before we do anything, because it does appear like it is getting some resistance. So the question is, where can we get in on this one? I definitely think that it's looking good, but it is a little. Let's see if I want to see how extended it is. Hold on one second. Yeah, it's pretty extended above the 21-day line. That gives me a little bit of pause here. I think we can buy it on a pullback to the 10-day line. So here's the thing about, if you want to buy Nvidia, I think you need to wait until you get a pullback to closer within 5% of that 21-day line. The 21-day line currently is at 169. So it would have to pull back quite a bit, or the 21-day line would have to catch up. So I do think this is extended here with Nvidia. I just think it's extended, and I think we've got to wait for a pullback. Possibly buy it on a pullback though, because the sector seems to be getting some good action. So Very interesting there. So thanks for that, Drunk Squidward. Appreciate it. All right, Charles, thank you very much. VRMA. Let's look at that. Or NA. There we go. That's the right one there. All right. This is in the pharma area, not my specialty, by the way. I wish I was better at buying these pharma stocks. But it has pulled back to the 21 day. So that's looking good. This is sort of a flag pattern, which is, you know, which can be very good, very bullish. Sort of a flag pattern there coming up. Uh, it's a little bit, and it's relatively close to the 21-day line, which is interesting. Don't know what's going on here with this stock, but technically it looks very good. 67 checklist, that's good. On the pattern recognition, it's a cup with handles, stage one, that's very strong. And the pivot on it, we're way above the pivot though. 1360 is the pivot. So how would I analyze this one? Well, I think it possibly could be very explosive out of this, but I have some concern because I definitely think it's likely to pull back a little bit. But the relative strength is excellent. It's basically in the top 1%, so I definitely like that. Let's look at the fundamentals here, just to check to see kind of if they're profitable. Okay, so they're not. So they're not. Their cash flow is negative, so they are basically a development company. They're not. They don't have positive cash flow. This is a little bit of concern for me because when you have a stock like this that basically does not, I mean, if they get approval, then they're going to do okay. So, but this is a little bit speculative. So here's the thing: I probably would pass on this one only because um, it doesn't have any revenue, and I don't like stocks that don't have revenue in this environment. It's still a development stage company. I mean, it could be explosive, but I think you got to be careful with it. I really do because it doesn't not have earnings, so that's an issue. The fact that it does not have earnings. So I probably would be going away from that one. All right, let's take a look at Tesla. This is for TikTok viewers. So let's take a look at Tesla real quick. Tesla has been making a nice move in the last few days. I'm still not getting back in it. I still think that it's a potential short. I kind of show you where I think it's a potential short. I think it's a potential short right about at the 50-day line. But it's up after hours, so it could possibly come back. It could possibly come back. Checklists, um, but it's below the 50. It's below the 50-day and below the 200-day line. I just think you got to wait on this one until we see strength above the 50-day line. I say, well, Jim, by then it's gone. But the relative strength kind of bothers me here. We only have a 5, so that means that it's underperforming the market significantly. Let's take a look at the technicals here. Good technicals, really, really good technicals. I mean, good fundamentals. Nice profit producer. But I just think this one has been overvalued, and I do think that it's gonna bounce here, and it's gonna get some. It's gonna bounce, and where I think it's gonna bounce is right there at the line. I definitely think it's gonna get some resistance. And just for friends, let's take a look and see if we've gotten it. Yeah, there's definitely some resistance right here at about 147, and I definitely think it's in a downward trend. So here's the thing I do with Tesla. I wouldn't be a buyer here. I just wait to see if it bounces lower on Tesla. Yeah, so that's kind of how I would take it. Take a look at it. All right, Noah Garza. Let's look at Halliburton, HAL. And this has been in a good space. Halliburton is in the oil field services, and the two biggest components of the ETF that's in this space are Halliburton and Schlumberger (SLB). Now, I was stopped out of Schlumberger yesterday, and I was a little bit disappointed there. it does appear it does appear that we're getting some nice support on this at about 40. So you can see that, see where the 21-day line is. This is why it's so important to look where the 21-day exponential moving average is, because this is going to tell us, this is, if it's moving up, this is where we want to be buying it. We want to be buying it within 5% of this, because if we do it by too much further than that, it gets extended, and that becomes very, very difficult. So the 21-day line is very, very important. We're right on the 21-day line. So this is showing potentially a good place to buy this one. So if we get a rally in the market, which it does look like we're going to get, now how long that'll last, it may only last a week or two, uh, but we are seeming to get a rally. If we get a rally in this one, um, then it does look pretty good. They just reported for December, and so they're looking good. They reported nice numbers on the fundamentals. Halliburton did well, did well in this last report. Their sales were up 31%, and their profits were up 100% per share. So that's very good. So it does look like we're getting some strong cash flow. Still has a very low PE ratio of 18. That's good. The return on equity 27%. So this is actually set up very, very well with regard to the other one. It's in the number one category, though. The number one area of the market currently is the oil field services area. Let's take a look at the competitors to it really quickly. SLB is number one. That's old Schlumberger. They changed the name to SLB. Still based in Houston. Same old, same old. Halliburton, of course, is number two, and that's basically makes up most of the oil field services. There are other companies, of course, smaller than that, but they're minor in terms of their market capitalization. Really, the two big ones, SLB and Chevron. Let's kind of look to see sort of if there's any difference between them. These are good ones to buy right now, just because they are looking. This is a good area. There seems to be a lot of investment coming in to the oil field services area, which could be a good place to be. So I'm going to check the performance here of uh, the overall oil field services to Halliburton, oops, and to Schlumberger. Oh, SLB, that's what it's called now. Okay. So this is this is the where it says G, kind of convoluted. Let's look for the last just 5 months to get a better chart here. So if we look at the last basically 7 months, um, the overall group has performed basically the same. Halliburton has basically performed just as the entire group has. So it's doing well, but it's pretty average. The stock that really is outperforming in this group is Schlumberger, not Halliburton. Now, Schlumberger had a pretty good day today. Yesterday, not so much. So this group is a potentially a very good area. Currently, Schlumberger SLB. Let's look at that. Is probably the better of the two. What I'm doing is I'm just shifting over to that screen now. There we go. So this is Schlumberger. This is the better of the two. As you can see, I got knocked out here yesterday. The New York Stock Exchange had this glitch, and unfortunately, I had a position in Schlumberger at the time, and that was painful because it sold me out, and it shouldn't have. But it definitely is making a nice move off of the bottom there, and it's relatively close to the 21-day line. So this wouldn't be a bad place to buy Schlumberger. The 21-day line is 55.27. So this would not be a bad place to buy Schlumberger. Let's see if it's overbought or oversold. I know I'm showing you a lot of indicators here quickly, but yeah, it's okay. So it is a little bit oversold here, and this lags. This is a lagging indicator, so it definitely, I definitely think that it's going to make a reversal here, but you got to be careful because it's a little bit oversold. All right, Charles is looking at AEHR. This is one I did buy a position in. I've been day trading this one. This one, is really interesting stock in my opinion. It's in the semiconductor test equipment area, AEHR, in the semiconductor test area, and I have done very well with the stock so far. We'll see how it goes. As you can see, there we go. I put some. I noted that I bought in my small portfolio. It's another up day after hours, so I don't know what's going on with this stock, but I'm getting a little bit worried because you know this. If you draw this trend line here, if it goes up more than this, it's probably going to pull back. So what I'm going to be doing tonight is I'm going to be putting in my stop loss right about at that trend line because I do think that it's likely to pull back because it's getting a little bit ahead of itself. But it's a great stock, as you can see. It's just kind of just going up here. But the problem is, I think it's growing up a little bit too fast, and I'm a little bit concerned that it is. So, what happens when the stock gets the way it gets like this? I typically like to put in some stops so that if it pulls back significantly, at least I'm cashed out with some money. So there you go. All right, oil sector. Absolutely, I think you're absolutely right about the oil sector. Let's look at the. Let's just quickly look over at the price of oil, the crude price, and this is the crude price, and it does seem like it's making a turn here. It does seem like it's making a turn. Currently today it closed at $80.13. So it does appear that we are making a movement up off the bottom. We were basically down here at about 70. That was basically in the beginning of December. And so it came up, it tested the 50-day line. This is the price of oil. This is not a stock. This is actually the price of the barrel of oil, 81, and then it's come back and then it's pulled back a little bit. And I think that it's probably going to move higher. That's what this is showing us. And this is why I think we're getting all this investment in the this is why I think we're getting all this investment in the oil sector because it does show that it does show here that we may have bottomed. And that's kind of this. I'm showing you the weekly chart here. We may have bottomed and we may be in an upward trend on oil. And if we are, then there's going to be Halliburton, Schlumberger are going to get investment because of that. We're starting to see a relative strength line here. It's moving higher. It looks like it's been pulling back, and then basically at the end of December, it's starting to move higher. So I definitely am bullish on oil. Yeah, I'm definitely bullish on oil, at least going forward because of this chart. It does look like we're going to see a little bit of a bottom and hopefully a bounce here. So that would be great if that were the case because and hopefully my, my investment in Exxon will be better. I don't know. We'll see what happens. All right, Lisa, thank you so very much. Let's look at the XLE. This is the Spider Select that covers the energy sector, and this is mostly Exxon and Chevron. That's what is the major components of this particular, of this particular ETF. By the way, that's a great way to play if you don't want to pick any individual stock. This sometimes is a great way to play. Is to go after the just the ETF because then you don't have to pick a particular stock. You just pick the sector, and I really like that as a way to play it. Now it has been moving down, but we did get this follow through day, and yeah, it's been moving down, but now it's starting to make its move up. Now it did pull back here to, and this is also why it's so important, and this is one of the hardest things to do, It does look like it's pulled back to the yeah. Let's see if I can. Okay, that's the crude oil price. I'm sorry. Let's get the XLE. I was thinking, wow, that's weird. Okay, there we go. So the XLE, it looks like it's up after hours, so that is good. We fell 2 days, and it does look like it's getting some support here. So let's look at the technicals. Yeah, this is a great place to buy it if you're looking to buy it. It's moving up, only 1.81% above the 21-day line, so that's very strong. That's a good place to buy it. This is a good place to buy it in general. I mean, we're definitely going to get more bullish on oil, so this is a great way to go. If you're looking to get into this, definitely this would be a good place. You could definitely buy it at this level because we're very, very close to that the 21-day line, and we look like we're reversing off of that, and it is up for hours. That's interesting. It's up significantly too. I mean, it's up significantly after hours. So definitely something, definitely give the thumbs up on that one. That looks really good. That looks really, really good. All right, Mr. Jeet, let's take a look at ENPH and Meta. Let's look at Meta first. I just am scared of Meta. I don't know what to think about it. You know, I think though we are going to see a whole lot of more. We're going to see a whole lot of more competition for the advertising budget. So that's one area that I do think that Meta, um, yeah, could be of a problem. Here's the thing: I'm not ready to jump into Meta here, and the reason I'm not is because I'm not convinced that we're in an upward trend. This is the trend line that I have drawn in here, and we're well below it. So I just don't think this has the strength. It only has an 18 relative strength. Earnings are in one day. I would not be buying this thing right now. I just wouldn't be buying it. Um, I think that they could have a negative number, and it could be a disaster. So I would not be a buyer of Meta here. It just doesn't look good. The trend also on the fundamentals, not good. Decreasing sales, not by a lot, but definitely decreasing sales. But more importantly, decreasing earnings per share. So I don't like that. I think that there's a lot of funds trapped in the stock. I think if it's a good number and it goes up a little bit, I would short it because I do think it's going lower. I do think it's going lower. That's just my opinion on it. I definitely think it's moving lower. All right, ENPH. Get to that one. ENPH. In praise energy. Oh, I like the energy stocks. As you know, right now. At least I'm liking those energy stocks a lot. So this is the ENPH, which in phrase energy. Now this one kind of dropped off. Normally, this one I don't know what happened here, but we definitely have some kind of sell-off going on. There's something going on with this company. It's below the 200-day line. It's got a relative strength of 70. What's going on? Oh, it's solar. Okay, I'm sorry. I thought this was an oil company. Yeah, you can see solar is going out of favor here. Let's just for fun, let's look at the solar area. Let's look at M phase versus um, let's look at this versus the XLE, which is the energy. Yeah, there's just no comparison. Look at that. Interesting. All right, let's show that to everybody so they can see it. So if we were to compare Enphase, which is a solar stock, against the XLE, which is the Energy Select Spider, you can see this is the last 7 months, just Enphase is in a downward trend. I mean, it's not good. Look at that, in a downward trend. Whereas the XLE is holding up very well. So this is telling us even with the tax credits and everything, the XLE, we want to be in the oils, not in the solars. That's just saying it right there. We just don't want to be in the we want to be in the oils, not the solars. The solars are just weakening. So that's my kind of my 2 cents there. I don't think you want to be in either of these, Meta or Enphase. I don't think you want to be in either of these. I just don't think that's where the market is. I don't think the market. Noah, thank you very much, Noah Garza. Let's look at MRO. This is Marathon, of course. And there's two marathons. There's the convenience stores and then there's the refining. This one is the refining. This is what, not the refining, what I'm saying. This one's the production company. And the other one is the stores. They're both good. Um, but you see this little glitch. This was the open of the New York Stock Exchange. We had some issues there. 81 on the relative strength. It's coming off of the looks like it's coming off of the 21-day line. Let's look at it real quick. Yeah, good place to buy it right here at 21-day line. It's looking good there. I like the sector. I like the checklist. Yeah, it's looking good. This is a good stock. This is the kind of stocks that you ought to be buying. I want to look at this one, and I want to compare it to another stock that I've had on my watch list, which is Hess. So what I'm going to do here is I'm going to compare Marathon with Hess. Oops, let's see if I can get that tool there. Going through and flipping a lot of things around here. So that's Marathon. And let's look at Hess, HES. Yeah. So as I figured, Hess is a little bit better. Hess is just a little bit better stock than Marathon. So that's one you probably want to put on your list here, as opposed to Marathon. I like Marathon a lot. I like MRO, but I think you're better off with Hess. I think it's got a better performance, and I always try to go with the winner as much as I can. Hess is just a little bit better than Marathon. So I'm going to move over to Hess, HES. I just think that this one is a little bit better set up. I think they're both good, but I like this one a little better here. It's up after hours nicely. Yeah, okay. And we were up 41%. So this one's getting ready to move. Hess, you might want to look at it. It's a 100% checklist. And on the technicals, we are getting a little extended, not too bad, 6.58%. But this one is moving up strongly. So not definitely one that you want to take a look at. All right, let's go for Mr. Finance Fund. And this will probably be the last one today. Thank you very much for tuning in, of course. All right, this is PP. I don't know what PP is. Interesting. West Kelvin pricing exchange traded fund seeking. Oh, okay. So this is a SPAC. Yeah, I think you got to be careful with SPACs. I'm not really a fan of SPACs because here's what a SPAC really is. It's basically just a checking account that may in the future produce something. So I don't like buying checking accounts. I like buying real companies. So I would skip this one. I just would skip this one as well. All right, and last one for Mr. Finance Fund. Boyle. This is the natural gas ETF um, that is leveraged. This one just ain't looking good either. This is the natural gas corresponding to the daily performance of natural gas. And the problem is natural gas has been moving lower, whereas oil has been kind of moving higher. So here's the kind of thing I want to show you the divergence here of oil and natural gas. So first, let's look at nat gas. And then also going to compare that against oil. And let's go for the last 7 months. Oh, so this is probably why oil is not going to be as productive as something that's more related to the price of oil. So this is the comparison really between oil and natural gas. And as you can see by this chart, the oil is moving higher, whereas nat gas is moving lower, and that's the thing. So we don't want to be in oil at this point. Where we want to be in the market is we want to be in something like the XLE, because the XLE is primarily weighted towards the oil companies. So we have an increasing price of oil, we have a decreasing price of natural gas. We probably don't want to be in oil. We just don't want to be in it because it's not looking as good as natural gas. Thank you, everybody, for taking a look at the show today. So appreciate it. Always, as always. If you have not signed up for uh, Dallas Trading Floor, it's really easy. All you have to do is go to www.dallas Trading Floor, or if you're watching on TikTok, just go to up here to the link in the bio. Click on that, and you can get set up on it very easily. Not a problem. Also, I always ask if you can like the show. That really helps us out. You know, so hopefully, smash that like button, and we definitely like that. So smash the like button on for Dallas Trading Floor. Smash that, and also sign up for the trade alerts as well. Those are free, and I think you'll like them. So until next time on Dallas Trading Floor, happy trading.